Here's the biggest misunderstanding about passive income. When people hear recurring income, they imagine needing thousands of dollars up front or building a massive business. But here's the truth. You can start creating recurring income with a small investment if you use the right strategy. In this video, I'll show you how to turn a small investment into recurring income, the 3 most practical approaches, and real examples of how they work. If you've ever thought passive income was out of reach, this will change everything. Let's dive in. The biggest myth: you need big money to start. Most people think recurring income requires huge capital. That's just wrong. What you really need is consistency, automation, and time. Even $50 or $100 invested regularly can grow into a stream of income that pays you for life. You don't need big money. You need consistency and time. Strategy number 1: dividend stocks and automatic reinvestment. Dividend investing is one of the simplest ways to turn small investments into recurring income. Here's how it works. You buy shares of a company or ETF that pays dividends. Those dividends are cash payouts, usually quarterly. The key is to take those cash payouts and reinvest them automatically using DRIP, the Dividend Reinvestment Plan. Here's how and why it works. Dividend growth companies often raise payouts over time. Reinvestments compound your holdings, which increases future payouts. Here's an example. You invest $200 a month into a dividend ETF like SCHD or something similar. At a 3% yield, after 10 years, you could earn $1,000 or more annually in dividends without selling a single share. Dividend investing turns small steps into lifetime income. Strategy 2: REITs, Real Estate Investment Trusts. Want real estate income without buying property? REITs let you invest in real estate portfolios and earn dividends, often higher than traditional stocks. It works because REITs are required by law to pay out 90% of taxable income as dividends. It also works because you get exposure to commercial properties, apartments, and more without managing tenants. Here's an example. You invest $100 a month into a REIT ETF like VNQ, for example. Over time, you'll build a portfolio that pays consistent dividends, often 3 to 5% annually. REITs give you real estate income without the headaches of dealing with tenants. Strategy number 3: high-yield savings and bonds for safety. If you're extremely risk-averse, start with a high-yield savings account and government bonds. While returns are modest, they're predictable, and you can ladder bonds for recurring interest payments. Here's an example. Invest $500 in a 6-month treasury bill at 5%. When it matures, reinvest. Over time, you create a rolling ladder that pays interest regularly. If you value safety first, bond ladders create predictable, recurring income. The power of automation. All 3 of these strategies work best when automated. Set up recurring contributions so investing happens without even thinking about it. This removes decision fatigue and uses dollar cost averaging to smooth out volatility. Automation beats timing. Set it and forget it. So how much should you start with? The short answer is start with whatever feels doable. $50 a week or $200 a month, or even $10 if that's all you can spare. The amount matters much less than the habit. As income grows, apply the ratchet rule. Increase contributions every time you get a raise or a windfall. Start small, scale fast. Habits compound into financial freedom. Here's a real-world example, the $100 rule. Let's say you invest $100 a month into a dividend ETF at 7% annual growth. After 20 years, you'll have about $52,000 and annual dividends of $1,500 plus. That's recurring income from a habit that felt tiny at first. $100 a month can turn into $1,500 a year in pure dividends. Here's a bonus. It's a hybrid approach where you combine all three. Combine dividend ETFs for growth and payouts, REITs for real estate exposure, and bonds for stability. This creates a balanced portfolio that grows steadily while generating income, even during market swings. Combine them all for a balanced income, stress-free strategy. Here's 3 common objections and some simple answers to give you some encouragement. Number 1, I don't know enough to start. Start with dividend ETFs or REIT ETFs. The work is done for you. They're already compiled into one investment. Complexity kills consistency. Objection number 2, I'll wait until the markets calm down. The markets almost never calm down. Time in the market always beats timing the market. And number 3, I can't invest much, I just don't make enough. Start with $10. Habits scale better than intentions. Turning a small investment into recurring income isn't about luck, it's about structure. Start with one strategy. Automate your very first transfer and let compounding do the work. Quiet consistency beats loud predictions. If this helped and you want calm, practical finance videos that actually work in real life, please consider subscribing to the channel. Leave a like. It's free for you and it helps me immensely. Join thousands of people just like you, building freedom one smart decision at a time.